Most traders overcomplicate swing trading, chasing moves, relying on lagging indicators, and getting stopped out over and over again. In this video, I'm going to show you exactly how I avoid all of that with my Apex swing model, a clean, price action based approach that helps me spot high probability trades with precision. This is the same model I use to trade real markets in real time, and it's built to work on any asset and any time frame. If you're serious about improving your swing trading, this is one video you'll want to watch through to the end, because I'm breaking it all down step by step. So first, I'll walk you through the exact price structure that forms the foundation of every Apex setup. Once you understand this framework, you'll start seeing these high probability trades across any market or any time frame. Then we're going to go over how to identify key price zones where institutions are likely positioning themselves. These are the areas where smart money steps in, and that's the area where we look to enter a trade. I'll break down my entry and exit criteria so that there's zero guesswork. These are the rules I follow, and they keep my trading consistent and emotionally neutral. This model is built around risk first. Every trade is filtered through a minimum 2R reward to risk lens. So you're not just winning more often, you're winning bigger when it matters. And finally, I'll walk you through a recent Apex setup from start to finish, and you'll see the structure, the entry, how I managed it, and exactly how it played out. And these are trades that I've shared live with my members of the private mentorship program. So my Apex swing trading model is built on continuations. It is generally easier to trade the continuation than it is to trade the reversal. So how would that look like? Trading a continuation is, let's say the market is busy here in a downtrend and we are making lower lows and lower highs. Then what do we get? Then we do get this change in the state of delivery where the market goes ahead. And if you do not know what a change in the state of delivery is, I do have a lot of videos explaining CISDs. Then the market gives us a change in the state of delivery or a market structure shift, and we leaves a fair value gap in its place. What a reversal would be is trying to catch the fair value gap entry and then taking a trade. But oftentimes what happens is this becomes a pattern, and the big players know that. So what they're going to do is they're going to push prices to displace and give us fair value gaps in this dealing range. So then we're going to go ahead and we're going to place our entry on that fair value gap. This is ICT's 2022 entry pattern, and we are going to get stopped out of our trade. This would be trying to catch the reversal. What I mean with continuations is if we get this entry here on the fair value gap, I'm waiting for a propulsion block to form. So the big thing about my Apex model is built on propulsion blocks. We all know what an order block is. An order block is as soon as we close above the series of down close candles that made this low, that becomes my order block. But what would be the propulsion block? The propulsion block would be if we get down close candles that trades into the order block as soon as we go ahead and we close above those down close candles. That would then form my propulsion block. And that is what I want to target or use as my entry when trading a continuation. Because then we have confirmed that this fair value gap is in fact holding and it's got enough liquidity to close above these down close candles, forming my propulsion block. So we are going to be waiting for the Apex model. We are going to highlight areas in price where reversals can take place, like all swing highs and all swing lows and fair value gaps. And then we are going to wait for a sweep of that with displacement. Then a pullback into a fair value gap after a sweep of the low. And this is where we are going to be looking for taking our trade. So this is what I mean with waiting for a sweep of liquidity, and then we get a displacement leg away from that liquidity point that leaves a fair value gap in its way. I'm then going to wait for the market to trade back into that fair value gap and give me a failure to displace into that gap. Here we can see we trade into that fair value gap, but if we look at the body of this candle, we don't close within that fair value gap. We sweep it and we close above it. This signature means that price action is busy respecting this fair value gap, and I can expect a continuation or expansion away from that gap. So this expansion candle, that is what I want to catch with my Apex swing trading model. Most traders fail not because they lack effort, but because they lack structure, clarity, and real-time guidance. The Simplified Traders Mentorship is built to change that. I've been in the trenches where you are. I've been unprofitable for years. And finally, when I became profitable 10 years ago, I've decided to make it my goal to teach people how to trade profitably, because it is not as difficult as they seem it to be. Inside the program, you'll gain direct access to a complete trading framework rooted in pure price action. It's designed for clarity, precision, and consistency, and it works across any asset and any time frame. This isn't about indicators or hindsight analysis. This is about your mentor showing up live, executing real trades right in front of you, and you understanding exactly why decisions are made right as they happen. This is a mentorship that's active, accountable, and honest. No fluff, no gimmicks, just the full picture of what it takes to trade successfully. You don't need to do this alone. Join a mentorship that trades with you, not after you. And you do not have to take my word for it. You can go ahead and look at the different testimonials of the members inside of our community. We are here to change lives. So as an example of the Apex swing model, I'm going to break down a trade that I've shared with my entire team inside of the members community. I'm going to break down a trade on NASDAQ or NQ, and for obvious reasons, I'm going to share a screenshot, but I'm going to block out the link because I'm not going to share paid content for free. It wouldn't be fair to the paying members inside of our community. Now, breaking down here on NASDAQ, I was starting on the daily time frame, and one thing I want you to remember is you do not need to go back all the way to price action that happened 20 years ago. I want you to focus on recent price action. And what do we see in recent price action? We see that we formed this swing low. So now I'm going to go ahead and mark out that swing low. So what does the Apex rules say? What do we need? We need the market to sweep the swing point, expand away from the swing point, and after expanding away, we need a fair value gap in the place of this, in this dealing range. We then need the market to pull back into that fair value gap without inversing that gap. And that is the expansion leg we are trying to catch using the Apex model. Here on this chart, we are waiting for the market to sweep out the low. We do sweep the low. As a bonus, we do displace above it. We fail to displace below it, but that doesn't matter. That's not what we need for the strategy. And now what do we get? Now we start expanding away from that swing low. We start displacing away from it, and we leave a very small fair value gap. Now what is the next step? Now the next step is we need this market to trade back into that gap without inversing this fair value gap. Looking at this piece of price action, let's see if the market does in fact trade back into that fair value gap. What happens? We trade back into the gap, playing price ahead, and we sweep out the previous candle low. And both candles, we fail to inverse this gap. As a bonus, what do you see over here? We have one down close candle that made this low that comes out of a fair value gap. So what does this candle is? What does this mean? That is our bullish order block. So I'm going to go ahead and highlight this bullish order block, and we can see not only do we sweep out the fair value gap, we sweep out the bullish order block and we fail to displace into it. So we have a failure to displace, meaning what would be my next draw on liquidity? I can expect price action to seek out buy side liquidity above this swing high because we have failed to close into bullish PD arrays. So we have a very strong bullish narrative on this price action chart. Dropping to our lower time frame, which will be our 1 hour time frame, Remember, from the daily we go to the 1 hour, and here we can see that daily fair value gap. Now, breaking this 1 hour chart down, what do we have? We've got two down close candles that swept out the low. We wait for a body closure above that zone. That would be my change in the state of delivery. This would confirm that my lower time frame, my 1 hour time frame, is bullish. Remember, we have a bullish bias on the daily, so now we need a bullish bias on the 1 hour time frame. So what would be the reversal? The reversal strategy would be taking a trade from this fair value gap. That is not what I want you to do. So normally people would take a trade from this fair value gap. I do not want you to do that. That is not an accurate way to trade. What I want you to do is wait for a propulsion block to form. What would be that propulsion block? It would be as soon as we close above these series of down close candles. That would be my propulsion block. I'm just going to go ahead and mark out this order block from body to body. Here we have this gray shaded area is my order block, and this line here would be my propulsion block. PB, propulsion block. Let's see what price action does. What happens? We start trading deeper into this fair value gap and we get an up close candle. So now what happens? My propulsion block moves down to these two bearish candles. As soon as we close above those two bearish candles, that would be my valid propulsion block. Not yet. And what do we get here? Do we have a valid setup? No, we still need a body closure above my propulsion block, above these three down close candles. As soon as we get that, we have a valid trade. That doesn't happen yet, and here we do get that. So now what do we have? Now we have an order block form. This market trade back into that order block, and we close above the three consecutive down close candles that made this low inside of our order block. This is a slightly more advanced trading concept, but it does offer you a better win rate. Now we can target 2R, and we have a valid trade. Now we can just leave this market to do its thing, and almost immediately we get spiked out and we've hit 2R. This is the trade that I've shared with my team inside of the members community. Here we have our second example, and this is going to be the in-depth example for the people who decided to stay to the end of the video. Here on gold on the 4 hour time frame, you can use the Apex model on any time frame. Just make sure that your time frame alignment is correct. The 4 hour time frame as a higher time frame means that the 15-minute time frame would be our lower time frame and our entry time frame. Here on the 4 hour time frame, we can see that we do in fact sweep out a swing low and we displace away from that low. After displacing, what does the market do? We leave fair value gaps. Here we have one, and over here we have a fair value gap. Something that you can add to the strategy to increase the win rates is adding a dealing range, or we can just go ahead and we can add a equilibrium range. So we are buying in this market. So remember, we have swept out of swing low and we have fair value gaps. So we are buying. What does the rule say? We want to buy from discount and we want to sell from premium. Premium would be your upper half. Discount would be your lower half. So if you want to get this tool, it is just my Gann box. And Gann box, my settings is 0, 0.5 and 1, and 0.5 I've made red. That gives you an equilibrium tool. Because we are buying, I want to buy from discount. That means I'm going to delete this fair value gap because it doesn't carry any significance for me anyway. So highlighting the fair value gap that's carrying significance for me, where I want to see, this is the zone where I anticipate a reversal to take place. I can remove my equilibrium because I've marked out the fair value gap that I'm waiting for the market to trade into. So just waiting for the market to hit that fair value gap, we do inverse that gap. But what do we get after that gap? We get a candle, a bullish candle that closes back above that gap. So the reason why I've kept this rule for the last example is to increase your win rate. Sometimes you're going to get this instance where we inverse the gap, but the very next candle closes back above the fair value gap. If we wait for fair value gaps that doesn't get inversed, you're going to wait a very long time. So I've added this rule to the last trade to show you how you can increase your win rate. So again, marking out our fair value gap, and we can see the very next candle closes back above that gap. Now we can drop to our lower time frame, which is our entry time frame. And what do we need here? Here we can see that gray highlighted box, that is our 4-hour fair value gap. I'm just going to mark that out there and adding that as my 4H fair value gap. Now what do we need? I shared the very next thing we need is we need a change in the state of delivery. Here we have down close candles to this low. So we are going to wait for a body closure to close back above these series of down close candles. That is my bullish change in the state of delivery. And that is what I'm going to be waiting for the market to give me. So because we haven't received a bullish CISD yet, everything that happens below it is irrelevant to me. I don't care about it. That is how you stay out of noise in the market. So waiting for this market to go ahead and close above that CISD level. What happens here? We close above it, so we do get a valid change in the state of delivery. Now what do we need? Now we need this market to pull back into that change in the state of delivery and close above the series of down close candles into this level. That would form my propulsion block. So waiting for the market to give me exactly what I want. What do we get here? Here we get a 2 down close candles into the CISD. Do we get a body closure above? Not yet. So we do not have a valid propulsion block yet. So let's wait for that to happen. What happens now? We sweep out the low, so my propulsion block moves down to these 3 consecutive candles. Let's see if we in fact do get that body closure above. Waiting patiently, not yet, and there we go. There we get the body closure above, and that is your entry. That is how you trade continuations and not a reversal. Stop loss, we cover this low because this is my new protected low. And we have a minimum of 2R. This is our trade, and we let this trade play out. And immediately we go ahead and we hit take profit, and we complete this market maker buy model. This is a variation of a strategy that I teach inside of the mentorship program. Obviously, I've left the highest performing strategy as the strategy I teach in the program. So if you would like to trade live with me, where I share daily market breakdowns, I share my trades on a daily basis, and I notify you as soon as my trades happen, go ahead and check out the link in my description. Let me know in the comments what you guys would like to see on the channel next. I would be happy to help you, happy to answer your questions in an upcoming video. Leave a like, leave a comment, let me know if you enjoyed this video, and I would see you in the next one.